All right. It is Friday, June the 3rd. And as you know, we always do a Friday financial news wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. It's always so fun to look back at a week. It's amazing how much stuff just happens every week that we get to talk about. And this week is no different. Lots of crazy stuff happened. I'm actually getting more excited, which is kind of counterintuitive, but yeah, let's get into it.
I love it. So obviously it's June the 3rd, 2022. It's the first week of summer. It was a short week. Let's talk about news this week. What happened with jobs?
Yeah. So the first economic number we get about May is May job creation, and it came out this morning. The expectations, this is all from memory, but I'll be close. I think expectations were for 323. I was calling 353, and they actually came in at 390. So a beat across the board. And I think this is one of those situations where good news is bad news, because right now, real estate, the stock market, a lot of people are talking about the Fed and their September rate rise. So this is one of those times where good news is bad news. Basically, a hot job market, a still hot job market, means the Fed is likely to do another 50 basis point move in September. Not yet priced in, but the more good news we get actually becomes bad news, because we're all trying to figure out when the Fed's going to pivot, when they're going to stop, when they're going to slow down. And again, one data point, so we need some more. But right now, May looks like a pretty strong month, 390,000 jobs, expectation 323. I thought 353, so beat across the board.
Very interesting. So just absorbing that, the jobs were a little better than expected. Mm-hmm. And what that means is potentially we're going to continue to see the interest rates continue to move versus stabilize.
Yeah, and inside the those numbers as well, we kept 3.6% unemployment. I think everybody realizes that the unemployment picture has to go up for the Fed to back down. We can't keep having 8% inflation forever. It just the economy breaks. So the Fed's going to force it to break. So one of the things that will likely break is unemployment will go higher. So yeah, this is kind of good news is bad news for people hoping for a pause in September.
Very interesting. Very interesting. So let's keep moving. Let's talk about news headlines. Two interesting guys, Elon Musk. Everybody knows Elon. Yeah. And then a second guy, Jamie Dimon. They had some releases. Explain who Jamie Dimon is, and then talk about the news headlines this week.
Yeah. So Jamie Dimon arguably is the best banker in the world, right? He is the CEO of JP Morgan Chase. The reason Jamie Dimon is important is he is rich enough where he just doesn't care. He doesn't have a filter. He's kind of like Sam Zell in that way. He basically came out a week ago and said, hey guys, we have some storm clouds on the horizon, which is to be expected, right? We got rising rates, we got a slowing economy, blah, 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 blah. Well, on Wednesday, he changed his tune. He said, folks, I have bad news. Those are not storm clouds. That is the front end of a financial and economic hurricane. Woo! That's different. That's not good. So hurricane. Yeah. Like, damn. So again, yeah, basically he is saying that much like I've been saying, right? I have a playlist on my channel called Whiteboard. I talked about 2022 and 2023 months ago. Stand by it still, which is kind of cool because things change so quick. Basically, a recession looks very likely next year. The thought of a soft landing is a joke. It's a marketing stick by the Fed. We're going to have a recession. The only question is how bad and when. And now Jamie Dimon's like, yep, we got an economic hurricane in our future. Prepare, get ready. So, yeah. And then Musk today came out and said, folks, I have a bad feeling. And as the CEO of Tesla, he basically said they're looking to stop hiring immediately and potentially laying off 10% of his workforce.
Wow.
So that'll catch your attention, right? I think they got 100,000 employees. So that's 10,000 people let go. Again, I think this is all on Twitter somewhere. And for me, again, I don't have any skin in the game. Don't have a Tesla. I think my wife ordered a Cybertruck, but who knows if that'll ever come. But I got to wonder, right? Do we have a demand problem? Because Teslas aren't cheap, right? They're pretty expensive. Or do we have supply problems because of the Shanghai shutdown? I don't know. But Elon Musk has got to get daily orders and daily shipping stuff. So something's clearly gone wrong in the Tesla pipeline, whether it's revenue or costs, because I don't think he talks about whacking 10% just willy-nilly. I think there's a problem out there. And if Tesla's having a problem, who else is having a problem, right? It's the economy is not healthy, like I think we've been talking about for a while.
Very interesting, Michael. I also just want to point out something you said, that with Jamie Dimon, he is so successful. He's not one of these guys that just splashes around headlines to sensationalize.
No, he's not trying to be, he's not these people trying to talk their book, if you will. Like there are some people that have been known to talk their book on CNBC and they have a position the opposite way. He doesn't care. He doesn't care. Yeah. So he's kind of a guy I listen to. Yeah.
Very interesting. Very interesting times. Let's continue to talk about something you and I've talked about for months and months, the real estate slowdown. What did you see this week in the real estate slowdown? And let's talk about that.
Yeah. So we talked about the real estate slowdown 6 months ago. I was shocked at how many California agents, frankly, told me I was wrong. Now they're like, got it right. Specifically California agents. I'm even hearing from some folks in Florida. I thought would be the last market to hit it, just given the population tilt. I think the slowdown is happening. A slowdown does not mean price drops. In fact, real estate doesn't move that fast. A real estate slowdown means more inventory, longer days on market, more price drops, less transactions, less profit if you're doing flips. So again, a real estate slowdown does not mean this horrific crash in prices, at least not immediately. A real estate slowdown to me really does mean crash in transactions, and it's happening. More and more people are realizing it. And it's frankly, Ty, it's only going to get worse from here. I wish I could tell you it was over. Dude, it's just started. It's gonna be quarters and quarters and quarters to come. So buckle up, Buttercup. Get ready.
The real estate slowdown we've been talking about, I feel like with the audience, the core audience, people who've been watching you for, I'd say the last year, especially the last 18 months, pretty much all of COVID, we knew that this was going to come. We knew something like this would be a part of this economic cycle. Let's talk about specifically the opportunity and something that you and I talked about pre-roll, which is it really is time to get excited. If you've been doing the work and preparing, this is our time.
Yeah.
Talk about it.
I really hope so. Right. I have a YouTube audience that's growing, which I'm so happy about. But one of the things that I take great care in is I'm trying to get focus in activity. I think there's a lot of talk about a housing crash, which I now say because I think we're going to have a horrific crash of 40% in transactions, potentially peak to trough. And some people here crash and they sit on the couch in a big ball and watch Netflix all day. It's actually the exact opposite. You should be working harder. You should be looking at your buy box every day. You should watch my buy box. I watch it every day. Doubled in 7 weeks, Ty. You know how long it's been since it doubled? Years.
Yep.
Years. Again, I'm seeing price drops. Now I'm still seeing wish pricing, but that's where it starts. You got to get the listings so you get the price drop so you can figure out who a motivated seller, man. This is all a series of dominoes. Real investors should be spending the next 60 or 90 days looking at their buy box every flipping day, because again, it will be changing. And then if you really think foreclosures are where the opportunities are going to come, I got news for you. Ty just released perhaps the most important section in my course called pre-foreclosures. Foreclosures are a year in the making. Could be a year and a half or 2 years. You want to be fishing in pre-foreclosures. You want to use PropStream. You want to use the scripts that Ty has just given you. I just loaded it this morning, Friday the 3rd. It is gold. People need to add, I need to add a new skill. I have never done a pre-foreclosure deal. This is why I have a channel. This is why I get experts like you who have been doing this time and time again. There are some times where pre-foreclosure is not a great skill because the opportunity is not there, a la the last 2 years. There's a time where pre-foreclosures, creative financing, seller financing will become gold and will have the best opportunities. It is right around the corner. Skill up right now. Get a new skill right now. Join the party. Get excited. Do the work. I am more excited today than I was yesterday. I will be more excited tomorrow than I am today because every negative headline scares 2% of consumers away. Now, that's just a rough number. I have no factual analysis of the 2%, but that's just how I internalize it. Great. Diana Olick, another negative headline. Great. Consumers gone. All right, great. Diana Olick, another negative headline. Great. 2% gone. And why is that important? Because they're my number one competitor. Why didn't I do a lot of deals the last 2 years? Because consumers can overpay, lower down payments, and lower rates. The more and more they vanish, the better deals I get, because some people just have to sell. And I will only write great deals. I will never write an offer at list price. I will fish for pre-foreclosures. I will fish for seller financing. The deals I do in the next 2 years will make the deals I did the last 2 years look terrible. And I'm okay with that.
I love it. I love it. And Michael, absolutely, folks, if you're watching this right now and you're not a member and a part of Michael's course, you can go to the website, onerentalatatime.com. You can buy his course. It is amazing. I'm a member of it. I've bought the course. I'm a paid member. And I got to say that it's some of the best information out there. And the core foundation of how to look at a buy box, how do you look at your market on a daily basis, all the daily disciplines, the weekly disciplines of how to go out there and create wealth doing what? Buying one rental at a time. So Michael, thank you for all that you share. I want to just continue on the thought that it is the opportunity time. I was late to our call this morning. Why? Because now I'm getting people calling me, people that maybe had a mail piece or found me online and said, you know what? I don't just need any real estate professional. I don't just need any real estate investor. I need somebody who really knows how to deal with a complex problem, a probate that's in pre-foreclosure, that's going to auction next week, all of those things. So folks, if you are in this space, now is the time to do the work, become experts at the different niches, the different opportunities. Michael, thank you for all that you share and all that you do. Looking forward to, it's interesting. This is going to be a great summer because last week, right, the first week of summer, we talked about winter, right? We talked about winter last week, right? Winter is coming. Winter is here. The headlines, it's interesting too, because news travels so fast now. The last cycle, if we think about 08, 09, it took months for the common homeowner to really understand that the market's changed. Today, news travels so fast, right? Folks, this is an opportunity. Michael, speak to opportunity as we close this out.
Yeah, again, what I really want people to realize is if you're watching my channel, we're a channel of action, of education. And I guess got comfortable, I think, last week talking about my channel is about building wealth. Wealth is time in the market versus time in the market. But wealth is really about taking action in a recession or a bear market. You want to buy one or two assets on sale. A recession in a bear market is the time. And we are heading into a time where transactions are going to crash at least 40%. And I'm going to find one or two, maybe three, and grow my portfolio. And I can tell you, having done this now this is my third kind of market correction. They're the best. They're the best deals I have on my book. And I buy all the time. So I'm looking forward to what's coming.
I love it. Folks, if you've not bought the course, go to the website, onerentalatatime.com. You can find the course in the video. There's links within the YouTube link here, this video. Michael, thank you for all that you do. Have a great weekend.
Take care, bud.